Hello, everyone, and welcome to an Onchain update for the 5th of June. So, what I wanted to point out today is just something, as I spend time in the chart, something just kind of crossed my eye and a couple of observations that kind of stitched together. And it's really about seeing a bit of risk off sentiment creeping into the market. So, we've seen that prices have gone pretty static. They have not been moving. Volatility is really draining out of the market, and so is liquidity. Now, there's information in there. The first piece is that it's really hard to know where things are going to go at this point in time. But the other one is that we're starting to see some undercurrents below the surface that may not be overly visible to the naked eye, suggesting that there is a risk-off movement. So I basically wanted to talk through some of the observations, kind of taking it as is and just trying to paint a picture. This one here is going to have a little bit of a bearish spin to it. So whilst my macro kind of theme has been upside that is more likely, I'll tell you what, there's a couple of things here that just give me a little bit of pause. Just some food for thought and things to keep in mind. Okay, so we're going to cover this from a couple of different angles. We're going to start with stable coins because I think stable coins really that there's a concept I want you to come into this session with. And that is that generally speaking, capital comes in and out of this market via BTC and ETH or stable coins. Really, at the end of the day, the guy who comes in and just buys Dogecoin and just buys Cardano, okay, it's a small chunk of the overall capital in the space. Take the top 5 assets, it's going to be stablecoins, Bitcoin, Ethereum, and they just dominate everything else. That is where the capital really is. So that's the frame of reference, and we'll touch on a couple of others in terms of exchanges shortly. So first high level is looking at stablecoin supplies. The aggregate here in red has been in macro decline pretty much since this time, but before, more than 12 months ago, before Luna even collapsed in May. So we have had a net outflow of stablecoin capital. Now, following that Luna event, there was a whole lot of panic around Tether. USDC gained market share. Hasn't that reversed? Tether has recently pushed to a brand new all-time high in supplies, 83.2 billion. USDC has shedded something like 11 billion, I think, or it might even be more than that, 15. BUSD has also shed about 11. So BUSD is obviously because the SEC basically said to Paxos, sorry, wrap up operations, it's over for you. And the interesting one actually, and the thing that got me really thinking about this was USDC. So USDC has been kind of the regulated version. It's where US entities would rather use USDC than USDT historically. And USDT found much more of a market fit in parts outside the US where getting a dollar, literally a dollar, is harder to do. We see it a lot more adopted in Asian markets. We see it a lot more basically around the world where they don't have access to dollar liquidity. Now, if you're a US regulated entity, USDC is non-interest bearing. But wait a second, bond yields are at 5%. So you can see here, sorry, this is just dominance. You can see the degree to which Tether has just moved. I mean, it's up here at 67% dominance, right? So what we're seeing here is a divergence. Tether tends to be outside the US. USDC tends to be inside the US. Hang on a second. Bond yields are at 5%. I can put my money in a money market fund. Why would I hold USDC? So that got me thinking, and I moved over to this chart. Now, this funky looking thing is the year over year supply change for Bitcoin. Blue is USA, orange is Europe, red is Asia. And what we're doing here is we're basically clustering, show me, balances are going up and down all the time, right? Shrimp, whale, whatever. So we're looking at all of the balances out there that are not exchanges. In what trading hours are they going up or down? Let's take all of the wallets that generally are active inside US trading hours. Now, are they going up or down in dominance? Right? That's the concept here across those 3 regions. So if you were to sum all these together, you get 0, right? So it's basically showing a dominance shift. Now, what do you see? Well, the US, this is Michael Saylor, right? Michael Saylor stepping in and saying, I'm going to buy all the coins. All of this, right, is basically showing you that this like US dominated, absolutely dominated their share growth. Now, by the way, this does not mean that Europe and Asia were selling their supply. It means their dominance. They were just buying less bigly, if that makes sense. Their accumulation strategy was not as strong, and the US grew its dominance. Now, remember when USDC started to decline? It was in around this point in time. And you can see here that the US has been losing dominance. Down 11%, 9.9% of that is being picked up by Asian trading markets. So if we kind of sum all this together, this to me looks like a hot regulatory environment in the USA. It actually looks fairly hostile, and US capital is a big market for capital. Now, what this also gives me a bit of a view into is that the US regulatory environment is playing a role here, which is not bullish for assets. Really, it's not really bullish for the space, but really, Bitcoin is the only asset that we know has any kind of regulatory clarity, if you can actually call it that. So there's a couple of charts upcoming that we'll look at that, to me, it does indicate that there is a flow of capital towards Bitcoin. And that's not necessarily bullish for Bitcoin. That's probably a bit bearish for the whole space, because money flows up the risk stack when it's not keen on taking risk. And if everything except Bitcoin is being viewed as risk, well, stablecoins are being viewed as risk. It's actually a net capital outflow. It's more likely to be net negative overall, although it will be less negative for BTC, is my kind of read here. So this tells me that there is indeed a US outflow of capital, or at least a US underrepresentation, certainly a complete polar opposite to what we had in 2020, 2021. And this aligns with the Tether observation as well. Look at this massive uptick in Asia dominance. Let me just go back a chart. Look at this uptick, same time frame for Tether dominance, right? These things are interrelated. Okay, so this is actually the chart that I want to spend a little bit of time on. I'm going to jump across to the full scale one. This is an interesting model. Now, with all analysis, there has to be some assumptions. Now, the very basic assumption here, I'm only looking at exchange inflows. Now, the reason why I only care about inflows, just ask yourself the question, how many times have you sent a stablecoin into an exchange and not pretty much bought it then and there? Generally speaking, when people send stablecoins into an exchange, of course, some people are going to be margining up collateral, and yes, it's dynamic. But generally speaking, if you decide that today is the day I'm going to send my stablecoins in, most of the time it's because you're executing a trade. Likewise, when you send BTC or ETH into an exchange, it's fairly uncommon for people. I mean, you may set a limit order, but most people are going to sell it within a short period of time, right? So let's just assume that's true. What we're looking at is exchange inflows of BTC and ETH, we assume is sell side. Stablecoins going in, we assume is buy side. Now let's net these off against each other. Which side is winning? Now, what you can see is that 2020, now this is a nuanced metric, and the reason being and it's still nuanced, stablecoins were growing up during this 2021 period, right? We saw their supplies exploding higher, and they started declining in through this period of time. So, of course, these things are very, very dynamic systems. It's the reason why I don't show this part of the chart, because over here, stablecoins had just a significantly smaller role in the overall economy, right? Let's roll the clock forward. In 3 years' time, this chart will probably be fantastically useful. At the moment, it is still evolving. So take it with a bit of a grain of salt. Nevertheless, when we look at this era, right, when the price, this is when Luna's collapsed. So as Luna collapsed, I don't know about you, but me, when I started seeing $30,000 prices, I was a whole lot more excited than I was up here at 50,000, despite the fact it was a bit chaotic. As we sold off down to 17,000, likewise, when FTX collapsed, me as a hodler who spent a lot of time with Bitcoin, yeah, I was going ham, right? So you can see the buy side picked up. People who had dry powder expelled it, and they sent their stablecoins to the exchanges in excess of the BTC and ETH sell side during these periods of time. Now, what happens once you have a big period of net inflows? Well, price goes up 100%, right? From 15,000 to 30. Happy days. So now let's zoom in just a little bit more. There's something a little bit different about the right-hand side of this chart, and it is that we no longer have inflows. In fact, we actually have more BTC and ETH flowing in than stablecoins. Now, of course, stablecoins are not the primary buy side. I personally don't really use stablecoins very often because I'm fortunate enough to live in Australia, even though the AUD can be a shitcoin at times. I generally buy my Bitcoin with fiat. So this is not going to capture that side of the equation. So there is, again, these are nuanced metrics, but we're trying to put it all together as a big picture. Clearly, during this correction, we have not seen the same kind of massive stablecoin inflows that propelled us from 15 to 30. And thus we've gone from 30 down to 26.8 at the time of recording. So it's a bit weaker. right? That's just one thing. Just keep in mind it is a bit weaker based on this metric. Now, I mentioned before that we've seen a dominance or a movement back towards BTC. Couple of metrics to really put that in perspective. This chart here is looking at Bitcoin. So up is BTC, down is Ethereum. This is looking at the overall dominance of, look at all the coins flowing in and out of exchanges. How much of it is Bitcoin? How much of it is Ethereum? Up means more Bitcoin, down means more Ethereum. We've seen a multi-year now, basically 2 year long gradual grinding uptrend of Bitcoin dominance. Bitcoin dominance is now up at 73% of all exchange flows are BTC, and this is in and out. The capital is concentrating up the risk curve, and that is net negative, I think, for the space, in the sense that I think money is flowing out of digital assets. And if it is staying in here, it is concentrating up towards the highest liquidity. It is concentrating towards BTC. So it's just one of these things to keep in mind. If we look at this purely based on that one there is the same. This one here, if we look at Ethereum, Ethereum is actually seeing a downtick in overall dominance. So if we just break those apart and say how much of that overall BTC and ETH is being driven by Ethereum, much more is being driven by Bitcoin. So Bitcoin versus stable coins is essentially seeing a preference towards BTC. And even so, we're actually seeing that if we compare all of these, stable coins still dominate the flows in and out of exchanges. So we see a net preference for stable coins as number one, Bitcoin for number two, and Ethereum number three and declining, right? Becoming more number three. So to me, that kind of speaks to a flow of money towards risk off. Stablecoins first, Bitcoin second, Ethereum an increasingly distant third. And the last thing I want to touch on, you've probably seen these charts before, but this is looking at futures and soon options markets. We're basically looking at how much of the trade volume on the right-hand side or open interest on the left-hand side is for BTC and ETH, right? Colors make sense. So open interest has kind of continued to plateau, Bitcoin representing between 60 and 65% of open interest. But this one is the one that matters in my view. Volume dominance for Bitcoin increasing quite significantly. We saw they reach parity here in late 2022, meaning that Ethereum had reached a market depth and liquidity that the market could kind of trade both of them. We ain't seeing that anymore. We are seeing that the market is preferring to trade BTC. Liquidity is flowing out from ETH. And you can see the same is basically true across the board. So the big picture takeaway here is this is a bit more of a bear, not a bear case, but a be cautious case. What we are seeing is that there is weakness out there. The market's a bit uncertain. We're kind of chopping around. We looked at, price signals and Bollinger Bands and all that kind of stuff a couple of days ago. There's a bit of a lean to the downside at this point in time, certainly in terms of capital flows. So just be conscious and ready for that. I don't think it's the end of the world, right? These things will always kind of recover. But it is something to just be prepared, ready, have a plan, understand that these things are not going to be smooth sailing. And given the kind of state of global macro, in many ways, I view particularly Bitcoin as a bit of an index. So I kind of see the stock market trying to punch higher, and it's kind of 6 or 7 stocks that are doing it, where most of that is Nvidia. And then I see Bitcoin just struggling. I see the Treasury needing to issue all these bonds and pull liquidity from the market. I see oil languishing. I see commodities languishing. So if I kind of see people pumping meme coins and Nvidia adding 300 billion to its market cap, that's the bull case. On the more bearish case, it's pretty much everything else. So my general view is it is the time to be cautious, the time to be careful. Things just aren't quite as rosy. So batten down the hatches and let's hope for the best. Anyway, hopefully that's useful. I wanted to get something out to you just because it's evolving. I hope should be useful. But anyway, sit tight. Let me know if you've got any questions, and I will see you in the next one. Cheers.